Bitcoin Bulletin is live. We're diving headfirst into a crypto market that's buzzing with activity. Get ready for a rapid-fire rundown of the news that matters most right now. First up, the Federal Reserve's looming decision is sending shockwaves through the crypto world, with Bitcoin and Ethereum caught in the crosshairs. What does this mean for your portfolio? Stick around to find out. Then, we're breaking down a groundbreaking proposal from the US Treasury that could revolutionize crypto payroll and legitimize digital assets like never before. You won't want to miss this. But wait, there's more. A disturbing Bitcoin scam is making its way through Ravalli County, and we've got the details you need to stay safe. Finally, lawmakers are giving the US Treasury a deadline to figure out a strategic Bitcoin reserve. Is this the dawn of a new era for Bitcoin as a national asset? All that and more, coming up right now. Don't go anywhere, and make sure you hit that subscribe button and ring the notification bell so you never miss an update. September's calm before the crypto storm. As the Federal Reserve gears up for a pivotal meeting, the cryptocurrency market is on the edge of its seat, with Bitcoin hovering near a critical point. The ongoing saga of Bitcoin spot ETFs continues to fuel investor sentiment, creating a delicate balance between cautious optimism and outright apprehension. Bitcoin has found a temporary home around the $110,000 mark, while Ethereum fluctuates between $4,300 and $4,500. Despite this apparent quiet, analysts caution against complacency. Historically, the final quarter, particularly October and November, often ignites significant price surges for cryptocurrencies. The looming question remains: what trajectory will these leading digital assets take? Both Bitcoin and Ethereum are facing substantial resistance and support levels, making their future paths unpredictable. The Federal Reserve's meeting on September 17th is the focal point, with expectations high for a potential 0.25% rate cut, which 88% of analysts predict. This move could signal a bullish breakout for the market. While a standard cut might stabilize prices, whispers of an unexpected half-point reduction are adding an extra layer of tension. This delicate interplay between market psychology and macroeconomic realities has the entire crypto sphere holding its breath. Recent data showcases Bitcoin spot ETFs attracting a remarkable $1.1 billion in inflows, indicating a market adjusting its expectations and a growing conviction among both institutional and retail investors for an upcoming surge. In stark contrast, Ethereum has seen approximately $100 million in outflows from its products, suggesting a more reserved approach from its participants. These ETF movements are not just background noise, they are critical indicators of market health, influencing liquidity and price action for both major cryptocurrencies. Bitcoin's recent price action has become a complex puzzle for traders as the market tests key support levels. Market experts like Michael van de Poppe advise a cautious strategy, highlighting the $108,500 level as crucial. He notes that while September historically brings corrections, any subsequent rebound could signify the start of a new upward trend for Bitcoin. Furthermore, significant investor movements, often termed whale activity, show a trend of shifting assets, with some increasingly favoring Ethereum while reducing their Bitcoin holdings, a strategy that highlights the evolving dynamics and potential risks investors must consider. Amidst these market shifts, the persistent issue of inflation in the US adds another layer of concern. Traders are closely watching how rising inflation might impact cryptocurrency markets, recalling historical patterns where inflation often spurred speculative investment. As 2023 progresses, understanding these economic forces is paramount. The regulatory environment also presents ongoing hurdles, especially for innovative Web3 startups navigating compliance while attempting to introduce crypto solutions into the traditional financial system. With the Federal Reserve's decisions, fluctuating ETF flows, and mounting economic pressures converging, the outlook for Bitcoin and Ethereum is a potent mix of risk and opportunity. Investors are at a critical juncture, demanding adaptability and keen observation. As the latter half of 2023 unfolds, the age-old question persists: will Bitcoin reach new heights, or will it face significant headwinds? Strategic engagement and careful navigation are essential in this complex and uncertain landscape. Don't blink because the market is moving faster than ever. Next up, we're exploring how the US Treasury's bold move could redefine crypto payroll. US Treasury's Bitcoin Reserve, the future of crypto payroll. The US Treasury's exploration of a strategic Bitcoin reserve, SBR, could be a game changer for crypto payroll, signaling a serious governmental interest in digital assets and potentially paving the way for clearer regulations. This initiative might streamline operations and set new global standards for crypto compensation. Cryptocurrency is already offering innovative payroll solutions, attracting companies looking to boost talent acquisition and operational efficiency. The prospect of an SBR could accelerate this trend, making crypto payroll a more mainstream and attractive option for businesses worldwide. If established, an SBR would position Bitcoin as a national asset, potentially stabilizing the often volatile crypto market and enhancing its appeal for payroll purposes. Government backing could also inspire other nations to adopt similar crypto payroll strategies, creating a significant ripple effect across the global financial landscape. Companies venturing into crypto payroll face several regulatory hurdles. Navigating tax implications and IRS guidelines is crucial, as is managing the inherent volatility of cryptocurrencies. While stablecoins and strategic volatility management can mitigate risks, clear guidance is essential. Furthermore, robust Know Your Customer, KYC, and anti-money laundering, AML, compliance frameworks are non-negotiable. Educating employees on managing their crypto salaries and ensuring seamless integration with existing payroll systems, potentially through crypto-friendly banks and treasury APIs, are also key considerations for successful adoption. To counter volatility, companies can utilize stablecoins like USDC, set caps on crypto payments, or implement dynamic salary adjustments based on market conditions, ensuring fair compensation for employees regardless of crypto price fluctuations. Blockchain technology offers substantial advantages over traditional systems like SWIFT for cross-border payroll, promising faster, more transparent, and cost-effective international transactions. As crypto payroll gains traction, blockchain's efficiency could fundamentally alter global salary management. The US Treasury's SBR initiative could foster a more interconnected global crypto business banking environment, simplifying cross-border payroll and enhancing international business operations. Countries like El Salvador, which have already embraced Bitcoin for salaries, serve as early indicators of this growing global trend. The potential establishment of a U.S. strategic Bitcoin reserve marks a significant milestone for crypto payroll. By offering regulatory clarity and institutional endorsement, the SBR could drive wider adoption, improve operational efficiency, and position companies for success in the evolving digital economy. But it's not all smooth sailing in the crypto world. Now, a chilling warning about a dangerous scam targeting Ravalli County residents. Ravalli County Bitcoin scam, a disturbing warning. A new and disturbing scam is circulating, with letters containing explicit images of children being mailed to residents in Ravalli County and surrounding areas. These letters threaten recipients with dire consequences if they don't transfer Bitcoin. These malicious letters arrive in plain white envelopes with no return address, featuring a printed mailing label and a Canadian stamp. The core of the scam involves threats. Failure to send Bitcoin will result in the explicit images being uploaded to the recipient's electronic devices. Authorities are strongly advising residents not to open these letters due to their graphic and illegal content. The Ravalli County Sheriff's Office urges anyone receiving such a letter to handle it with extreme caution to preserve potential evidence, and to contact the non-emergency 911 center immediately or deliver the letter to their main office. This scam highlights the disturbing lengths criminals will go to, using illegal and shocking material to extort money. The community's cooperation is vital in helping authorities combat this threat and maintain public safety. Stay vigilant against scams, but also keep an eye on the bigger picture. lawmakers are pushing the US Treasury for a definitive plan on a strategic Bitcoin reserve. US Treasury gets 90 days for strategic Bitcoin reserve plan. In a significant move, US lawmakers have mandated the Treasury Department to deliver a comprehensive report within 90 days on the feasibility of establishing a strategic Bitcoin reserve. This directive is part of the broader fiscal year 2026 appropriations process. Bill H.R. 1566 specifically tasks Treasury officials with evaluating the creation of both a dedicated Bitcoin reserve and a wider digital asset stockpile. A key aspect of this assessment is understanding how such reserves would integrate with the existing federal forfeiture fund, which holds assets seized by government agencies. The Treasury must detail how Bitcoin and other digital assets would be accounted for on the federal balance sheet, outline proposed custody arrangements, and address critical cybersecurity measures. The report will also need to identify potential third-party contractors for asset custody and clarify the legal authorities that would govern such a reserve, ensuring its security and operational integrity. This 90-day deadline signals a clear sense of urgency from lawmakers to formalize the U.S. government's stance on Bitcoin as a strategic asset. This initiative builds upon previous efforts, including President Trump's executive order earlier this year exploring a similar reserve, though without a concrete implementation timeline. Furthermore, legislative proposals like Senator Cynthia Lummis's Bitcoin Act underscore the growing congressional interest in defining a national digital asset policy. The current lack of a defined framework has left market participants uncertain about the government's long-term approach to digital reserves. As the deadline approaches, the industry is keenly awaiting clarity on how the U.S. government intends to incorporate Bitcoin into its strategic asset considerations. This development could significantly shape the future regulatory and economic landscape for digital assets. And that's a wrap on today's top stories. Don't go anywhere, we've got a lightning round recap and your full call to action coming up next. And that's a wrap on today's Essential Bitcoin Bulletin. We covered the Federal Reserve's impact on Bitcoin and Ethereum, the U.S. Treasury's plans for a strategic Bitcoin reserve and its implications for crypto payroll, a disturbing Bitcoin scam in Ravalli County, and the 90-day deadline for the Treasury to outline its Bitcoin reserve strategy. Don't miss out on any of the action. Make sure you like this video, subscribe to Bitcoin Bulletin for all your crypto news, hit that notification bell so you're alerted to every new update, leave us a comment with your thoughts on today's stories, and follow us on all our social media channels for more insights. We'll see you in the next one.